Dzień dobry, witamy bardzo
Good
serdecznie.
afternoon, ladies and gentlemen. Welcome on behalf of the LOTOS Group. We would like to welcome you to our conference, during which we will introduce you to our financial results. I would like to welcome all the journalists who have joined us today in the building of the Warsaw Stock Exchange, as well as those who are joining us online. Before I introduce our today's speaker, let me just remind you that just like every time, if you are joining us online, you are still welcome to send us questions or comments at our email address, and of course, we will try to respond to your questions today during this conference. And if we receive these questions later, we will send you our answers later. So we are joined by Krzysztof Nowicki, Vice President for Mergers and Acquisitions at LOTOS Group, Łukasz Minut, Executive and Financial Director, Wojciech Zenkteller, Head of the Investor Relations Office. And now I would like to hand over to Vice President Nowicki. The floor is yours. Good afternoon, ladies and gentlemen. Today's meeting to discuss the results of the LOTOS Group is a great opportunity to inform you about a number of subjects that are linked to the functioning and operation of the group, although they are not strictly financial results. Let me tell you that the presentation of the results that will be presented by Director Zenkteller suggests that the LOTOS Group SA has been able to use the last quarter very well. Not only last quarter, also the last 9 months of this year, we have been able to use the opportunities, the business opportunities that became available on the market, and later on we will explain to you how it happened and what were the proportions of the opportunities we were able to use. We will also tell you how the macroeconomic situation affects our situation, as it determines a major part of the results you will see later. Ladies and gentlemen, we will also tell you how the situation of the company looks like. We believe it to be stable, and we'll also inform you about some activities which come as consistent implementation of the plans adopted by our group for the period between 2017 to 2022. LOTOS SA finds itself in a particular situation. You probably know that on the 14th of October 2021, the shareholders extraordinary meetings of our shareholders took place, and during that meeting some important resolutions have been adopted, and these resolutions refer to the possibility of transferring our refinery assets to LOTOS Asphalt, thus creating an entity within our capital group that will be responsible for production. It will be a dedicated entity. A second factor, or a group of resolutions adopted by the meeting, was related to the meeting agreeing to taking certain remedies and introducing certain methods in connection with our merger with Orlen. The support for the second resolution was at the level of 90%. As regards the remaining resolutions, the support was at the level of more or less 84%. We are really grateful to our shareholders for your confidence in us and for your trust. And thank you for adopting these resolutions without objections, which is really historic actually. Another information that's important in recent months is that we started production and at the IME field on the 25th of October 2021, and you will find out more about it later when we hear from our directors. An important element of the implementation of our strategy is connected to signing an agreement for hydrocracking oil block. It's an oil block that will allow the Lotos group to have available to Group 2 all groups, including heavy fractions that are necessary in order to be able to develop new oil products for lubricants used in the industry. Ladies and gentlemen, now moving on to tell you about the financial results. Let me just tell you that LIFO EBITDA after 9 months of 2021 is at the level of 2.8 billion zloty. And maybe to satisfy your curiosity about the methodology of calculating this extremely high results in the Lotos SA group, I would like to hand over to Director Zenksteller and then to Mr. Minute, who will explain it to you in more detail. Thank you very much. Yes, the time has come to discuss our presentation with you. We are waiting for your questions at Grupa LOTOS.pl, and of course we are open to any questions that the journalists present here today might have. Ladies and gentlemen, in your materials on slide number 4 you will see the standard picture, standard image that shows the development of our results. 2.8 billion on this slide, it's expressed in million. The dynamic year-on-year has been quite high, but let me draw attention to an effect that makes that in a way distort these figures. The effect we have the effect of expensive or cheap layers of crude oil. This has to do with the LIFO calculation methodology we have adopted. So without going into too much detail, let me just tell you that in the current period, this result is better by 0.24 billion. And in the comparable period, it was worse by 0.37, having to do with the expensive layers. And in this year, we are seeing the positive effect of cheap layers. As you will probably remember, we've seen a decline last year, and this year we've seen an increase. This shows that the dynamic year-on-year in business terms, strictly speaking, is not as high as it might seem. So this is, I just wanted to tell you. So operating cash flow in 2021, here the figure is slightly lower, but when Director Minut takes over, he will tell you more about cash flow. The refining and marketing, crude oil throughput in Gdańsk, in the upper right corner. The results have something to do with a regular shutdown that has to do with repairs, and that's why the throughput is lower than last year and lower than in 2019. However, this has nothing to do with commercial issues. It has been caused by the necessity to shut down certain parts of the installations in order to repair them. As regards the daily hydrocarbons production for the last 9 months, it has been lower than previous year because of maintenance shut down in the Stripe field. In September, it was shut down, and you will know, ladies and gentlemen, this is the one with the strongest production we have, and obviously it translated into a lower level of production in 2021 in this field. Slide number 5, which shows you the quarterly split of our results. As regards the year-on-year effect, we will see the influence of the cheap layers effect, but if we compare individual quarters, we will be able to see more realistically the business opportunities that we used in a niche field in which we specialize in order to be able to use the opportunities that emerge there. So what you can see here is very positive information because operation cash flow but to LIFO EBITDA was too low, and now we are back on a safe level of 0.5. Upper right corner shows you the quarterly crude oil throughput. levels very good in the third quarter. We no longer had to repair anything, so we were able to work in full swing. Daily hydrocarbons production, bottom right corner here, you can see the decline more strongly because in the third quarter the Sleipner field was shut down for repairs. So much from me, and I'd like to hand over to Director Minut. Thank you very much, ladies and gentlemen. Welcome. When we start talking about the macroeconomic conditions, we can move on to slide 7, and we have to start from gas prices. We've seen in 2021, as the upper right corner shows you, the season, was high season for the sales of gas. We've seen in 2021 the storage levels, stock levels in Europe are lower by 30% compared to historical levels we saw in previous years. On the one hand, we can see that the supply is lower, both from the east, also transmission is lower, and then there are also stoppages in larger fields, for example, the Norwegian continental shelf, which reduces the supply from the western or northwestern direction. And obviously, such distortions and such reduced supplies in the face of increased demand increases the natural gas prices, and you can see in the upper right corner, it reflected on the diagram. In the second quarter in 2021, the prices tripled. This trend can be observed even more dynamically in the fourth quarter of 2021. We don't expect any significant influence of natural gas prices on the results of individual segments of the LOTOS groups. I'm referring to individual segments because, as Director Zenkteller already said, in the exploration production segment, we are the producer and seller of natural gas as well, and all actions we are taking are aimed at being able to use this potential that stems from increased gas prices. We will try to increase the production volumes and, in consequence, also sales. In the refining sector segment, we've observed increased prices of natural gas consumptions, but using the flexibility of the Gdańsk refinery, we have a chance to reduce the consumption of natural gas and replace it with our own fuels from the refining of crude oil, in order to be able to balance the prices and optimize energy costs within the refining segment. At the bottom of the slide, you see presentation of what we expect to see in the future based on the forecasts we have. Seems that the situation is not a short-term phenomenon. The forecast predictions we are adopting right now suggest that looking at the macroeconomic situation and high prices we have right now, maybe not as high as in quarter 4. However, it seems that the prices will remain high about until the second half of 2022. And now moving on to talk about some more standard macroeconomic aspect on slide number 8. You can see how the macroeconomic environment affects our strategic assumptions for 2021. The situation is relatively stable also as regards the second quarter of 2022, when we can see crude oil prices, they are growing, but the growths are not as dynamic as the ones we've seen for natural gas. For the refining segment, product cracks for petrol relatively high, for gasoline, a stable level, slightly below than our strategic assumptions. The difference is more or less 11% for medium distillates and for diesel. In our refining margin, in the LOTOS group, we will see more. It's more than 60% of the production. So it really affects the results generated by the refining segment.
And currently, we've kept observing quite a large pressure from the point of view from the macroeconomic ecosystem of margin. 74 of dollars on 1 ton of crack oil means something very low in terms of the level when it comes to our strategic assumptions. This notwithstanding, it is also worthwhile stressing that as of October, we have seen quite an increase of cracks on oil and diesel, and the same applies also to gasoline products. And these cracks are equivalent to around $200 for gasoline and $100 for diesel, which is very much telling of the fact that we are returning to the strategic path that we once signaled, and something whereby also pandemic is producing very significant ramifications from the point of view of production, exploration, and also demand for these products. And we are keeping our fingers crossed for the jobs campaigns. Lockdowns are no longer seen, and then PLN versus dollar is something that we can consider quite positive for our margins, and the overall margin is going to be felt by those who see also the relation between dollar to PLN, which is still very high, and we also see a very dynamic growth of the overall economy in Poland, which is then translated into greater supply on the part of both gasoline and diesel. And this is also worthwhile stressing again that as regards the Poland's market, we've become the importer of gasoline instead of being an exporter, and this has a significance for Lotos Group, as we can also optimize our effects, and margins on the part of export has been also streamlined. And to sum up, the period that we are discussing has brought about significant price increases of natural gas. The ecosystem is quite stable, and still unfavorable conditions when it comes to cracks on diesel. However, within the entire margin framework for these two areas, the beginning of the fourth quarter is also characterized by a slightly more optimistic outlook when it comes to long-term trends to be addressed. So that would be it when it comes to this summary of the macroeconomic ecosystem. And now over to Wojciech Zengtela, upstream area. So we are now returning to the results of particular individual segments from a slightly more general overview to more detailed perspective. What has happened in the upstream area? Results are incremental and are much better compared to the previous period, and this is also very much the result of the macroeconomic standing. Prices of crude oil and natural gas have been very much under the turbulence related to COVID pandemic. On the one hand, and on the other hand, and there was also the pressure exerted by the OPEC countries, and therefore, and the results were, logically speaking, worse. Now the situation is tremendously better. And this notwithstanding, at this moment in time, we could have generated a better margin if it hadn't been for the Slightler field, which took place in September. There was a shutdown, and this also related to decreases of prices of natural gas, and it actually decoupled from the historic medians. But this is not a loss, this is just a temporary shift for the Sleipner basin. We've returned to the regular levels. So having a look at the prices of natural gas, we need to say that the margin is to be accomplished in the quarter 4. As regards other significant events, this is not technically speaking the fourth quarter, another commissioning of yet another field, but we've got the continuum of 13 years of failures when it comes to the actual management of the said basin. Other problems occurred in March 2020. It was down to COVID that we needed to prolong the original schedule of operations. We needed to send off all the workers from that field on this drilling field. They needed to be sent home. There were problems. However, we managed to commission the production 2.5 million of reserves and 5,000 barrels of production, and we don't yet know how this field is going to perform, but during the next conference we are more than hopeful that we can eventually give away all these bits of data to you, what the actual production throughput is going to stand at. And now regarding slide 17, this is the photo of our production assets, production and inventory. You see Sleipner's drop, 5,000 barrels. Now, when it comes to Utgard field, here we had certain problems related to certain drills. They were too hydrated, so this level of production was not as originally planned. Nevertheless, it is far better than it had been during the first months of the current year. Slide 14 now, ladies and gentlemen, concerning production for products broken in certain hydrocarbons. On your left-hand side, you see this lower layer of natural gas, which also translated into a lowered margin, 3,000 barrels per day. As you can see, this figure, this means there's September's drop that we were discussing, and hopefully we are going to recreate this and recreate this in the current month. Natural gas also affected the change in the structure of sales, 60% of crude oil and 40% of crude oil and 60% of natural gas, and hopefully we're going to have more crude oil at the expense of gas, and this is very much in accordance with our overall strategy, because we want very much vocally to be more in favor of crude oil, and this trend is and has been changing for the last 5 years. Now, slide 15 is to illustrate the evolution of our assets from going from the left-hand side towards 2020. You see broken in certain segments what being managed to produce in the first 9 months of the current year, and then comes reclassification. This is not a classical classification. That would be a product of the geological analysis of the performance of a given field. This is just a shift made to harmonize our works on certain permitted fields, so that we've got the desired number of barrels in the annual overlook. Now, we are seeing here in this slide first 9 months of 2021 for production for the upstream area. Last year, as you can well remember, our operational results were below the zero level, and this situation was also very much down to significant write-offs in the upstream area, and this happened in the context of very low crude oil prices. Now the situation is far better now. On this slide, you can see also the reverted situation when it comes to write-offs that we had. Seeking more optimistic scenarios, we could have done it also in light of better pricing for oil in the months to come. Here we see a quarter diagram, 255 million of EBITDA in the upstream area, and this could have been far greater if it hadn't been for Sleipner shift. Nevertheless, we also very much hope we can regain these wins in the quarters to come. Now, moving on to the production, to the downstream area, slide 17. Here you can find a summary of the situation, which very much illustrates situation here. 2 billion of clean EBITDA generated, thanks to fuels, by and large, thanks to what we can sell here domestically in the country, and thanks to the fact that we've been flexible enough to be able to manage certain product niches from the perspective of us being able to look at what's going on in the market, not only fuels, also smearing and lubricants, smearing oils and lubricants. These were products that we can very much also profit from on global markets, and this contributed largely to the production of the overall result. Now, in the second bullet, we are quite transparent in telling you that our logic the logic of cheap margins has no impact whatsoever of the flows that we generate. The commencement of the project of oil unit, EPC, September event, quite a breakthrough in our business strategy. Just a quick reminder on my part, ladies and gentlemen, when we were determining our strategy, our assumption was that we'd have certain projects in the area of downstream where we needed to pick up and fish out those elements that would be best in line with our strategy as well as market expectations. HBO project was there, and now it has been attained, and we are now at the actual forefront of this R&D project. As CEO Nowicki said, in retail, after the passage of these 9 months is quite similar to what we had last year. It is also worthwhile accentuating that our margin contribution from the outside of the fuel industry keeps growing, which is to say that we keep growing in those in the sectors whereby we want to maximize our efforts and unshackle our potential, so that we can also stumble on our fuel stations refinery margin. Yet another significant element that we wanted to stress: when you keep observing the margin in the proximal period, you'd be more than likely to see the difference of our margin and the margin which is showcased by other European players. And those players also explore this result, and our margin is going to be lower. Just a quick explanation, this is very much down to those players' methodologies. We are the only ones who point down to gas costs that is to be incurred by all the players, and the margin will eventually be burdened with this margin. It won't be communicated by our competitors, but this result won't tell you we are outperformed by the others. Here, when it comes to refinery, in the upstream, we've been quite stable, moving on and moving through the upcoming periods of time, very much adaptive to the current trends. Almost 3 million tons in production in the refinery sector. Here, there are not so many one-off events, and by the way, we've been always transparent in telling you if anything has happened. So I won't be dwelling on it too much, but we've got here 150%. Year by year, we had cheaper distillates, more expensive distillates, and having this in mind, this increase is not that significant. More than 900 million in EBITDA in the quarterly overlook, clean EBITDA in the set period of time. Better by 140 million compared to the previous quarter, and it could have been accomplished thanks to greater sales volume. Third quarter of this current year was there without any shutdowns. Therefore, we could also optimize our production that was then very much split into all the segments. We've got oils, basic oils, and the prices herein were very satisfactory, and the volume that was produced by us was very significant, was very remarkable, and so we've got these results as satisfactory as you can see. Here we've got this model refinery margin as signaled beforehand, and this very figures threshold can be can be living through very much pressure. In October 2021, $1.7. But let me tell you that this cost component, as we see it on the part of natural gas, is equivalent to as many as $10. And that's what the model stands for. But as Director Minert told you, we are now taking measures to optimize and to mitigate this significant cost, to have it replaced at the level of throughput. Gas is seen as a medium serving to obtain certain throughput, and we concentrate on cheaper alternatives.
So much in terms of segments, and now I'd like to hand over to Mr. Minut, who is going to sum up the results. Thank you. This is my great pleasure to sum up the consolidated financial results starting from first 9 months of 2021. The slightly rounded clean EBITDA LIFO 2.8 billion zloty, starting with one-offs about which Director Teller informed just now. In quarter 3 2021, there were no significant one-offs on this side. Actually, none of the segments. The only one related to exchange rate changes. So comparing the pandemic 2020 and to post-pandemic period of the first 9 months of 2021, if you try to compare them, we see that the only stable component in this analysis is the cost of depreciation in the results of the Lotos Group. A great positive influence of the positive macroeconomic environment on also results and exclusion of the so-called cheaper layers effect, also mentioned by Director Teller. So in summary, first 9 months of 2021 is a time in which we've seen twice higher results for exploration and production, and also that result in refining and marketing, and now results for quarter 3 of 2021. Here the situation is very similar. In practice, we are talking about extrapolation of certain trends that started in quarter 2 of 2021. This result is very close to it. As we said, quarter 2 was a period in which we were still finishing the maintenance and repairs. In quarter 3 of 2021, this effect was no longer observable. The other factors, for example, capabilities of the refining segment for the adaptation to the positive environment in terms of margins we are able to achieve on the sales of base oils. We were able to use this opportunity. The clean EBITDA LIFO for quarter 3 was as high as 1.2 billion zloty. And now, maybe transferring this clean EBITDA LIFO to our cash flow situation, liquidity starting from operating cash flow of 500 million generated in quarter 3 of 2021. This effect is slightly distorted by a one-off situation that had to do with the working capital and certain settlements that will actually be reversed in quarter 4 of 2021. And this factor actually gave us an additional 500 million zloty, which in practice will be then reflected in the cash flow of quarter 4 2021. Taking into account this element, in practice we have been able to convert 1-to-1 the clean EBITDA LIFO on operating cash flows. In terms of capex, it's similar to previous quarters. Especially the right-hand side is really tangible because it represents it shows how capex looks in individual sectors, how development projects look like in exploration and production. We can see a domination of the Norwegian sector. We are successful in starting the IMO field, and 2/3 of our capex is spent on the Norwegian continental shelf. And now moving on to refining and marketing. Here we see no changes. Capex that we saw on replacing catalysts during the repairs still remain stable. In other projects, we can see stability as well due to the just communicated launch of the HBO project. We expect in the upcoming periods this segment, refining and marketing, will grow more dynamically than in previous quarters. Retail, lowest capex among all segments we have, but comparing this capex, we can see still a growth in the first 9 months of 2021. We've seen a dynamic development of petrol stations. Our capex actually exceeds very strongly the levels of capex we saw in previous periods. So in general, we can talk about strong development of retail. Last bit of information during today's presentation is a summary of our debt situation. We've already discussed the essential elements at the beginning of the presentation. Well, we can say that the trend continues. The trend is quite stable in terms of the liquidity of the Lotos Group. The net debt at the end of Q3 was lower than 400 million zloty. Now thinking about the debt indexes, this index, after eliminating our leasing obligations, it is about 2%, which is a very safe level. One of our strategic indexes, the net debt compared to EBITDA LIFO, again, after eliminating our leasing liabilities, is at a level of more or less 1/10. And let me remind you, our strategic parameters, we assume that this level should not exceed 1.5. So we are way below our strategic assumptions on the safe side. This is the last bit of information we would like to tell you about, and now I would like to hand over to Director Kasprzyk. Thank you very much. Ladies and gentlemen, now we have time for some questions from journalists. I know that Mr. Marszałkowski sent us his questions as well, but let's give you a chance to ask your questions in person. Yes, thank you very much. My name is Mariusz Marszałkowski from Business Alert. My question is, in upcoming months, are you planning any repairs on your platforms? On the platforms or concessions that belong to Lotos. Sleipner was shut down for one month, and there was no throughput from the Norwegian shelf, and it affected the results of the company. So are you planning to have any other stoppages in other fields in the upcoming months? Thank you very much. I would like to respond to this question in the next 3 months. Of course, as far as we are informed, the operators of the Norwegian shelf concessions are external entities. However, as far as we know, in the upcoming 3 months, no maintenance shutdowns are expected. The first shutdowns that are expected are planned for Q1 of 2022. As regards specific dates and major shutdowns, we are not expecting any in Poland, and as regards other countries, not earlier than in Q2 of 2022. Are there any more questions? If there are none, and obviously, apparently there are none, we would like to thank you for today's meeting, and I would like to remind you, ladies and gentlemen, that you can still write us at grupalotos.pl. This is the address of our press office, and of course you can stay with us. We have some time to talk to you unofficially after this conference. So if you would like to talk to us, feel free to stay. Again, I would like to thank you. And thank all the speakers, Krzysztof Nowicki, Vice President of Mergers and Acquisitions, Łukasz Minut, Executive and Financial Director, Wojciech Zengteler, Head of Investor Relations Office. Thank you, gentlemen.